Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. So this video is another trade school high frequency trading explanation and example video. In this kind of videos, I explain exactly how I trade, why I trade, took the trade, what you have to be care about in this kind of situations, what the EMA, the Bollinger Bands are telling you in any kind of situation, and how you can distinguish a good trading setup from a bad trading setup. All those things are based on those things, and I think that is the basis. Yes, you need those things which I have explained in my ebook to understand the trading opportunities which I'm explaining in this video. So get this ebook, it's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, candlestick math, and a lot of more concepts which can be applied to any kind of time frame and any kind of financial instrument. So get this ebook, it's for free. You'll find the link in the description, and in the description you'll find also the link to the Facebook group. So get this ebook and join the Facebook group. And I don't know, but there are still people and traders who are asking where to find the ebook, yes, and how to join the Facebook group. You find the link in the description. Okay, so let's see what if I can show you now those trades and explain those trades, why I took them, and on what you have to care about if you trade the same style. So let's see. Here is the video. We have this video. You see, we have here. I will explain first of all the condition. So you see here we have here a downtrend. Yes, here downtrend. This downtrend starts with this evening star. Yes, this is an evening star as a fake breakout of the 20 EMA. And after this evening star, the downtrend is started. Here we get again a engulfing candle. So that was a sign that the downtrend will continue. A nice strong Borobudur candlestick which finished at this level, this round number, which is a nice round number because you see we have at the end 0, yes, and then after this the downtrend continues a little bit more after a retracement, yes, and then we get here this kind of strong support level where price is not able to cross, and after a few candles, 1, 2, 3, 4, yes, 4 candles which are not able to cross this, where they are creating again lower highs. Yes, here this candle is creating a lower high. Um, sorry, a higher low. Yes, I'm talking about a higher low. This is a higher low, and maybe also a higher high. Yes, of the previous candle. I will explain this in one of the next videos. I gonna do a trade here. So let's see what I have done. So I will do play here, and then you see the situation. We have another 15 seconds. Yes, important is here also what I have to mention is the EMAs. The EMAs, you see the 20 EMA is not steep. It's almost flat. It was flat here, yes, and it's still flat. That means that the trend is not established. The EMAs are in the right direction. Yes, you see also the alignment here above is somewhere the 200 EMA. Then we have here the 100 EMA, which is flat too. Yes, this is not steep. This is flat. This is also almost flat. Yes, because it would look like a little bit different if price would be if them would be steep. Yes, it is flat, almost flat. This is nearly, I would say, 30 degree. Yes, 30 degree of the angle. So it's not steep, yes, and that's the reason why you could expect here on the next candle that price would reverse after this kind of downtrend. And this here is nothing else than an engulfing candle. So let's see what's happening here. Here was again another continuation pattern. Yes, here you could do another put after this retracement. So, okay, I'm looking now, yes, and I prepare to do a call, yes. And I entered on the movement downwards to get a better entry point, yes, to get a margin of safety below this round number, because I was expecting that we get here now in a reversal after this kind, yes, after this kind of engulfing candle. And like I have explained in the ebook, yes, here, this area, you see we have here this wick which is protecting the bed, yes. We have another wick here which is protecting the bed. That two wicks are showing me that we have here a strong support area. Yes, those two wicks, and I have explained this also in one of the other videos. Wicks, if the wicks are short, and you see a lot of short wicks too, yes, mostly two, because if you have more wicks, short wicks, yes, much more higher is the probability that this support area or resistance area will be broken, yes. So if you have two wicks, for example, the same is valid for this one here, this area here, yes, this one. Those two wicks are really small, yes, and you see this area is also a nice resistance area now, yes. This will protect your bet also in this kind of area. You could do here a put easily, yes, because you see those two wicks are showing that you have here a strong area. You see also that here it was before support area, and after it gone here resistance area. And the same is valid for this one. It was first of all resistance, and now you can expect that this will act as a support area, and that's the reason why I entered here into the downward movement to get a better entry point into a call. Okay, that was the reason why I have done this. Then the distance between the one deviation and the middle Bollinger Band or the 20 EMA is large enough to set a candle into it, yes. And also this kind of scenario is looking a little bit like a double bottom. Yes, you see here we have here a double bottom. Here the real body is here. Here's another real body, and this one here is higher than the first top, first bottom. The first bottom is this one. This is the second bottom. Yes, and you see it's higher than the one, and so you can expect also that this will be here something like a double bottom. I don't know if it will unfold like a double bottom, because mostly there will be have a large movement upwards, yes, but it has also the effect of the engulfing candle. Yes, the engulfing candle, there was a long downtrend before. I have explained this also. If you have a long downtrend or uptrend before, you can expect that the reversal will take more than only one candle. Yes, that is what you should have always in mind. Okay, so I will do play and see what's happening here. So market is doing some kind of panic. You see it's coming down to those kind of support level, which I have named before. Yes, I'm doing the turning around about the wicks and about the engulfing candle. And you see I'm talking about this downtrend. And after this, yes, because we have here not a strong downtrend, because the EMAs are flat, almost flat. This is almost flat. This is not so that this kind of EMAs are steep. Steep is something else. I will show you this soon too. And also you see that those two EMAs here are getting closer together. That means we have the peak. I have explained this too. I will stop the video after this. After this trade, you see it's going up. Yes, and it's got up. So, and the last movement on the last second was the sign that this double bottom, that this was also a double bottom. But important is to understand why I took this trade. I took this trade because we got here a confluence about this engulfing candle in combination with a double bottom, yes, on this support level here. And you see how price rejected here from this level, yes. And that was the reason why this trade worked out. Also, this kind of round number here, this candlestick here, the round number acted as also as support level. So, and important here is, you see that was the largest point between the 20 SMA and the 20 EMA, the middle Bollinger Band and the 20 EMA, yes, that is the largest point. After this point, you can expect that the downtrend get weaker, that the price is stalling. You see here that the trend is stalling. You see here how they get together. That means the trend is nearly over, this downtrend. And when those two are crossing, there can happen almost two things. or you get a pullback, yes, that would mean the trend will continue, or you get a trend change, yes, that means you get an uptrend here, okay? That is what those two EMAs, as the SMA in the EMA is telling you, yes? Okay, so let's see what happens then. Okay, then I waited and I'm preparing to do another call after I saw the last movement, this strong momentum, and I will talk about the momentum then. So let's see, I entered again. You have seen I entered again. I will get stop. On the down move again, yes, I entered into a call again. And why? Because I know that price will often retrace at the last few seconds of the expiration time of the candle. That means I try to get the best possible entry point, and in this case, the best possible entry point, and I missed this best point because the candle moved a little bit, yes, was in this case after this hammer, yes, which is not the best hammer to be honest, and that's the reason why I tried to get in this a little bit lower, yes, here at this level. Why is this the best point? Because we have here this reversal, this retracement and reversal, yes, of those two candles, which are telling me that there is a support level. And what I'm doing here is the same what I have done here, yes. Here was a call option on support level into an uptrend, yes. I saw we got here an engulfing candle, yes, we got here an engulfing candle, and so I did a call option on support into an uptrend, and here I'm doing the same. The movement was downwards, yes, but I knew that we got now into an uptrend and not into a downtrend again, yes, and so I did a call option into an uptrend on support level. And important here is that I got this kind of hammer. It's not the best one, yes, it should have maybe a smaller body and a higher, longer wick, but it's still a hammer, yes, into an uptrend, and that is a confirmation that the uptrend will continue also if because we broke the 100 the one deviation Bollinger Band, lower Bollinger Band with determination, yes. And now you see how those two EMAs here are getting closer and closer together, and that is what I have explained. Or we get now that they are crossing and we get a pullback, then the price will go down, or we get a change of the trend and then price would go up further. That are the two options which are available. So okay, that was it. You understood that I tried to get here the best margin of safety to get into the trade. I would like to enter also below this 2-1. That would be almost better, yes, but this is also a nice position. Sometimes you cannot do better because you have to decide when to enter into this trade, but I have seen on the movement downwards, and most traders will fail and will get out of the money only because they understand this movement, what the first initial movement, as rejection, and believes that the market will go down further, enter in the wrong direction, yes. Mostly the market will do panic all the time and stay in the money, and on the last few seconds they get out of the money because the market has fooled them. So okay, let me do a play here so we see what will happen. You see it's doing red candle all the time and it tries to fool the trader, yes, doing like there would be a reversal or something happening, and then after the purchase time is expired and it starts the expiration time, that candle will be green, and you cannot do anymore anything, yes, because you have here now the expiration time, and that are the last few seconds that you can only watch and see how your trade is going out of the money, yes. That is that part. So, and you see after then in the last 2 seconds it's doing a huge movement, okay. So that was this one, and after this I do not any kind of trade. That's the reason why I'm not entering. And why? Because I saw already this kind of hammer, yes, this kind of hammer unfold with a strong candle, yes. You have also to see here, if you draw here some line, you will see also that there was a trend line, yes. But important is here that this candlestick is risky to trade because we are too close to the 20 EMA, and price could reject from this 20 EMA at any time. That means if you would enter for example now, yes, the problem here would be that price would retrace below the 20 EMA, and you see how price is going down yet here. Yes, that is the reason why you cannot enter into any kind of trade. I'm preparing to do a call here, yes, and I entered after that candle into a call. Why? So again, you see, I entered into this trade below the closing price of the previous candle. This candle here is, to be honest, a weak candle. Yes, and you see now here also that the scenario happens, yes, which I was talking about. The 20 EMA is crossing now the 20 SMA, the middle Bollinger Band, yes, and that movement here, this kind of movement, this slow and steady upwards movement, is a sign that there is an uptrend. Yes, you see, price is doing here higher lows, higher lows, higher lows. Yes, and not only higher lows, also higher highs, higher highs, higher highs. Yes, and also the last one here, this kind of last candle, which is a weak candle, it's still creating a higher high and a higher low. Yes, that means we have still an uptrend. Then this candle here broke the 20 EMA, yes, with determination. Yes, that is a nice broke through this area. Yes, and then I waited for the first movement, and that is the first movement already showed already again the wrong direction. That tried again to fool the traders. Yes, the price gone down against the 20 EMA. I entered into this trade, and after this you got this kind of rejection. You could also wait for this kind of rejection and then enter, but I would not. I would say you wait for a rejection and wait then again to get the best possible entry point. But if you have already understood that this is an uptrend, yes, and you see all those higher lows, higher lows, higher lows, higher lows, you can expect, yes, with a high probability that the trend will continue overall, because this candle has broken the 20 EMA with a bullish candle. Also, it's a little high, a little bit. It's a high wave candle. It's not such. It shows also a little bit of indecision, yes, but it's an indecision that the uptrend will continue, yes, and that is only because the last few candles are showing that the trend is into an uptrend, and that is it already. Yes, I don't know how far away it's going, maybe not far, because we have here this kind of 2 weeks which are doing a resistance, yes, so that would be maybe a small one. Or if it breaks through this, yes, it will be a larger one, because then price starts to consolidate in the consolidation area between the 20 and the 50 EMA. That can be happening also, because we got here already a reversal at the 50 EMA. So it's mostly probable, if this will be not flat enough, yes, that price. And you see also, it could be also after this trade to get into a consolidation area and going down, yes? Okay, so let's see what's happened here, and if this will be a large candle or not. I do not expect a large candle. Important was only that I showed you that I entered here into the rejection downwards, yes, to get a better entry point, because I was expecting that price will get higher, because it's creating all the time higher highs and higher lows. Yes, and here now it's getting a little bit okay. We are breaking through this area here, yes, and maybe it rejects or retrace on the last few seconds of the expiration time below this level again. If not, we have a strong uptrend still active, and so it will be a huge candle, yes. So you could do maybe another call on the next candle, or it will be an exhaustion candle. It looks more like an exhaustion candle, because there should be coming up some kind of retracement after such kind of uptrend. Okay, so that was it already. We closed a little bit above this. Yes, and you see it's a strong uptrend. The candle continues to going up against the 100 EMA. Okay, so that was already. I hope I have explained this kind of, and you see, we got here and how long it takes. So the 20 EMA now was crossing. There was no pullback, yes, and now you can expect that the uptrend will continue. That would be in this case another call, yes, because now you see how they're getting wider and there was a trend change, yes. That is what a lagging indicator is. You see here the uptrend is nearly, yes, sometimes it's almost over and then the crossing will happen, yes, and then the price will trace at this point or there will be a reversal, yes, because the indicators are lagging, and that is what you have to have in mind, that they are lagging and that you have to anticipate often the movement only based on price actions. That is the, here, this, look at this kind of candle here, yes, this kind of engulfing candle, or if you want this kind of double bottom, yes, are the anticipation of the uptrend which is coming, and you see what kind of timing advantage price action can give you against the EMAs, yes. It took here 1, 2, 3, 4 candles or 3 candles to understand that the uptrend is there, and then you have only 1 candle to use it, yes, or 2 candles to use it, yes. And here you could, like I have done here, trade 1, 2, 3 trades in a row and maybe more if you would be much more risk. If you would be a more risky trader, you could trade also more, but you have to understand that every trend will finish at any point. Okay, so that was it. If you like this video, do a like. If you didn't subscribe, subscribe to my channel. And if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.